Welcome to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield. It was another crazy week. Of course, we had a report from the USDA midweek, but really not a lot of excitement. No surprise there for that February report. But it does set maybe the thinking tone, which we're going to talk more about today, is what we're going to see long term with these grains. We know there's a lot of outside market influence coming out of Brazil and maybe a smidge out of Argentina, but we've got weather issues. We've got box beef movement. We've also got the fact that we might see some seasonal highs going on for these livestock. We're going to talk about that and a whole lot more on this week's report.
Imagine a future fueled by soy-based possibilities. A future where creativity and productivity live together under one roof. A future that takes you from point A to point B to point Z, all while ensuring brighter tomorrows for our next generation. A soy-based future? It's already here.
And welcome back. As you can see, joining me once again, Kyle Bumsted with Allendale, and then we've got Sam Hudson with Cornbelt Marketing. And gentlemen, it is the time of year that I start to get anxious because I want to smell dirt and diesel. And I know we're only sitting in February, but we know very soon we'll be at Commodity Classic, which means those farmers to the south will already be getting those fields crops planted. Having said that, I want to get both of your spins on the report earlier this week, since there wasn't a lot of excitement in it. And the spin of the wheel, Kyle, the computer popped you up first. What are your kind of overall thoughts about the USDA report?
Well, everybody knows I'm not the biggest fan of USDA reports to start with, but it really didn't say much here, do much. They did, revise some of our export projections down here just a little bit too, but it's nothing the market didn't already kind of know and have priced in per se. The chart action today was a little bit weak, but on the report day, we had an outside day higher and then followed that by an outside day lower. So I think it's more technical selling. I don't really know if the report had much effect on things.
What about for you, Sam? What were some of your initial thoughts?
Just a snoozer. I don't think USDA really had a lot of room to move at all on the bean balance sheet anyways. We got stocks to usage is going to likely hover around 5% until we see some sort of a confirmed, shift of demand to Brazil. We continue to see sales and shipments both, well ahead of pace. And I just don't think they had a lot on the vine to move either way. And I think you could say the same thing about corn. The risk for corn, I think, moving forward is just, if we see a lazy energy trade and continuing to keep the margins thin, particularly in Western ethanol plants, it just doesn't bode real well, especially with our export market being so far behind. I do believe that'll improve as we go into spring, and it'll be nice to see river systems more at a more normal level, I believe, as we enter that time frame. But we're gonna be playing from so far behind, Susan, that I don't think it's gonna be enough to move the needle one way or the other. And at the end of the day, I think we're eventually going to shift the risk to the new crop contracts. And with that, we could see that gradual kind of bleed out of the market. We've seen that in basis already, and that could eventually happen with the spreads as well.
You and I were talking earlier in this week, and you brought up during our Fontanelle Final Bell program about some ethanol plants and the concerns that are happening with them as we get closer to spring planting.
Yeah, especially I mentioned out west, with the competition with the feeder, they've continued to have to pay, well over $7 cash corn to continue to get that in there. And as we see the seasonal build coming in ethanol stocks, I think they're trying to get ahead of the game, or at least looking out in time to not get trapped in this thing. A lot of politics involved, obviously, with the RFS and the enforcement of it, whether or not we're going to get E15 year round and all this. But at the end of the day, it just reaffirms that we've got this glass ceiling on the market. And we saw Green Plains Ethanol announce a 10% reduction in production across the board here. And I don't know if those would be the only ones out here that we'll see that with. We've continued to see a big struggle with hours at ethanol plants across the Midwest, and with deliveries being behind. I think that's going to stretch into that April delivery timeframe. Typically, we're at a time where basis, should be narrowing.
All right, I want to throw this around to you, Kyle, because you live in cattle feeding area. So what Sam's talking about, what type of pressure are you guys seeing in that competition to get those feeds?
Well, yeah, for sure. There is competition out here. Locally, the local co-ops and the local ethanol plants, they are having to bid up here to try to get some corn sourced in their direction, as opposed to going to the feed yards, which feed yards are still bidding up for it. There's still cattle on feed. The yards are still full. So, obviously they're bidding up here, and the local processors, ethanol plants, and local co-ops have had to increase that. Even the local rail bids have had to kind of increase just a little bit, just so they can try to get some of that pulled away from the feed yards.
All right, long term, we're going to look at the bigger picture. Let's start out with this meal market, because it's been interesting as of late. We'll start with you, Kyle.
Well, bean meal at $500 a ton. I mean, we could look at a chart and say maybe it's a double top, maybe it's not. But technically, if we go through that, I mean, there was a lot of 520 bean meal calls bought here today. So someone's thinking there might still be some upside. I know it's cheap insurance. Maybe it's a cheap spec play. Not sure what that is. But bean meal up here, that is kind of telling me that Argentina doesn't have a crop. Maybe the amount of beans it's going to have to go to Argentina from Brazil. Maybe they're concerned about that as well too. So definitely a market to keep our eyes on here. And if you're, a producer or, something like that who has got a lot of bean meal locked up at these levels, it may be advantageous to have some downside risk just in case this thing were to fall out of bed on a producer here that's got the bins loaded up for chicken producer, hog producer, dairy producer, whatever it may be. Maybe some cheap insurance to the downside. So it does help offset that.
Sam, what about for you? When you look at this Brazilian market and knowing that China is just waiting to get those fresh beans.
Yeah, well, and it started with that Argentina, production problem. It's given us a little bit more of a extended, export period for us, and is also creating a little bit of interest in that meal market, as you've already mentioned. We saw Decatur meal trade over $500 a ton here on the cash market just this week, and if that continues, it's just a signal that maybe the squeeze on the board isn't just all for nothing. So as we go into delivery here, it'll be interesting to see how lofty we can get there and how sustainable it is. But when you got someone caught in there, you got to do what's got to be done. And I think as we see that reverse, it'll be maybe a lot of interest in the meal oil spread all over again, and what it could mean for the soy oil market in general as we get closer to the summer driving season.
So as we get ready to hit the middle of February, folks are already going to be thinking about this crop that needs to get in the ground. Let's get both of your perspectives, Sam. First of all, with long-term grain perspective, what are some things that you're going to be watching for, knowing Mother Nature hasn't been the best going into this spring planting?
Well, I think the first thing is where we just talked is it really starts with Brazil. We've penciled in or even penned in this 155 million metric ton bean crop there. Really, at this point, there's probably no risk of a drought. They've been wet for too long. If there's a risk at this point, it's that they stay wet. We've seen some persistent rains already cause some quality problems, but it's been in pretty isolated areas, and there's a lot of crop yet to be harvested. If we're still talking about this in 3 or 4 weeks, though, we mentioned the risks there with protein content, just quality in general, and overall yield. And if the market has to backtrack from the 155 million metric ton number at a time where we're probably still going down with Argentina production, it's going to put a lot more pressure on the U.S. acreage battle. And I think that's where we start talking about our weather. The first thing I'm looking at is what type of precipitation we get in the plains to facilitate potentially more corn planting, where dryland acres may not have normally facilitated that after the drought we had last year. So I think that's a big factor going into this year. I think that could range our corn acreage anywhere from 90 to 93 million.
All right, Kyle, what about for you? What is your long-term grain thoughts?
Long term, I'm still watching those spreads out there in the new crop D's corn versus July. See what the commercials are really thinking there as far as the forward curve. Right now, there's really no incentive to store bushels. They're still wanting the corn off the combine. Soybean, same thing. That no versus Jan and no versus March bean spread out there. There's still some inversions out there, which tells us it's long term, fundamentally friendly. There's still some commercials out there that think, yeah, we've got to get some beans covered here off the new crop. So I think further out there is going to tell the story in the spreads. If the commercials are really bidding up the spreads like they have been in soybeans here lately, then they're trying to buy some bean acres, and maybe some of this acreage battle's already going on. Also, like Sam said, the precipitation out here, we have had some precipitation in the form of snow. It did let us know that we still can get some precipitation out here in the far western Corn Belt, but we still got a long ways to go before we stick the corn plant in the ground out here.
Well, especially since, and I'm going to glance here at my other computer monitor, as they were talking below average runoff continuing for the upper Missouri River Basin, though the southeast part of South Dakota got lots of water, so there are snow, so they're worried about some possible, melt runoff from there. But the long-term picture for these rivers still isn't pretty.
No, not out here in the western Corn Belt for sure.
What about you, Sam? What are you hearing about the rivers on your neck of the woods, including the Mississippi?
We're still going to be running on normal to slightly below normal draft levels. I think this rain that we've gotten this week will certainly help things quite a lot. We've seen quite a lot of snowpack in the Missouri and Colorado River basins, though. I do think you're going to see a decent improvement out there, but that doesn't necessarily, equate to, good crops necessarily. I think it's just about charging the system in general, and there's a long way to go before that's even done. So around here, I think it's more about the timeliness of that rain. Typically in the springtime, we're going to get at least something at some point in time. And the question, like I said, is timing for not only the export market, but eventually getting our crops in general.
And of course, those farmers that closely watch those heavy fogs have written it on their calendar to see if 90 days out we get some of those precipitations throughout this spring. Want to switch gears quick and take a look now as we continue here with the Nebraska Soybean Board Weekly Market Roundup. What's been happening on this livestock side? And first of all, I wanted to get your thoughts, Sam, on where we're seeing the movement of the box beef.
We've seen a relatively strong market when you look at historical, tendencies or historical numbers in general. We've seen a bit of a relaxation in some of the spreads of late. And I think this is kind of where we start to decide here over the next few weeks if we're going to see another leg higher in the cash market, and that may be a signal with this February going off the board. I think it's going to be necessary before we see, the June and August contracts really leg up again. But in general, it's just hard to not have an optimistic viewpoint with the herd liquidation that we've seen and the challenges that we may still have this year with rebuilding that. Now, that the headwind there, of course, is economic sentiment, but at the end of the day, as long as the market's still there, we have to continue to feed it.
All right, Kyle, are we going to get those seasonal highs that we normally get this time of year?
That is possible, and we may be working on one right now. We do have a seasonal that has tended to work out very well in the past. April live cattle here on Valentine's Day typically does tend to put in a short-term high, and then we kind of drift lower into the end of March before we start getting April into delivery. Now, when it comes to the herd rebuilding and the cattle placements and things like that, we still have plenty of cattle on feed, and I know that the recent cattle on feed report, everyone in the industry was talking about record low placements. However, we must keep in mind that when we were looking at these numbers here recently, those were compared back to record high placements. So we still have plenty of heifers in the feed yard on feed. There are a few operations out there that are starting to buy heifers and hold some back, but I don't see as it being huge in the industry just yet.
Joining us today has been Kyle Bumsted and, of course, Sam Hudson as well. And as we always like to remind folks, commodity futures and options do involve a substantial risk of loss that aren't suitable to all investors. And that's been this week's version of the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff.